Hello everybody, John Jamieson here again. Hey, today I want to show you how to obtain a large life insurance policy on you, maybe your spouse, on a partner, pretty much anyone that you have a mind to, for no premiums out of your pocket. How is that possible? It's a strategy called premium financing. And in essence, what you want to do is take out a large life insurance policy. How large? $3 million is going to be about the minimum, and usually more like $5, $7, $10 million is going to be the range. Can be more, but that's kind of the sweet spot for a premium finance deal. And why would you want a life insurance policy like that? Well, it could be for a lot of reasons. Maybe you're involved with a partnership and you want to be able to buy out your partner. Something happens to you. You want to be able for your spouse to get paid off and not have to be a part of the business and fight with your partner. That's very common, called partnership insurance. You can do that and not have to use any of the company's money or any of your money for the premium. A bank will loan it to you. Might want to be a situation like a client I just had, that they have a very successful business, they're getting up there in years, and when they pass away, they're worried about what's going to happen to that business and their 3 kids. Mainly because they have 2 children who want nothing to do with the business. They're off doing their own things, but they do have 1 child that does want to run the business. So what do you do? Because you obviously want the other 2 kids to get what's theirs, their rightful inheritance, if that's what you want to do, and split it 3 ways. So what they did is they took out a large life insurance policy on themselves, but they didn't want to make any premium payments. They have their cash tied up in other things. So we proposed to them a premium finance deal where the bank is loaning 100% of the premiums over the next 10-year period. They don't have to put a nickel up. I'm going to show you some real numbers here in a minute. And that will cover that big death benefit that they're looking for without any money out of their pocket. Now, they will have to put up a little bit of additional collateral in the early years, because it's not totally self-funded at that point, but it is after about 4 or 5 years. So after 4 or 5 years, they don't even have to put up any other additional collateral. The policy is going to be the 100% collateral for that loan. What's another reason you might need it? How about could be estate taxes? Now, as I record this, most people aren't going to have to worry about estate taxes, but that's going to change because this government's $21 trillion in debt. They're going to do anything they can to get any money they possibly can to pay for their ridiculous spending, all right? So if you're a wealthy person, they're going to start coming after you, and they want the money that you already paid tax on. They want to tax it again. So what if you want to leave behind a life insurance policy to pay any potential estate taxes? That can be a reason. Or any reason you deem necessary that you want a pretty large life insurance policy, but you don't want to pay large premiums. Now, you also probably don't want a term insurance policy because the cost of those skyrocket as you start to age. So that's not a long-term solution. If we're looking for a long-term permanent solution, let me show it to you in the form of premium financing. All right, so let's go over some points. First of all, we already said no out-of-pocket expense. Now, you will be borrowing money at a very attractive interest rate, so you may have to pay some annual interest on that loan, but that's going to be a fraction of what the premiums would be. All right, so possibly in some years you might not have to pay. But just put in your budget that you're going to pay interest on this loan as time moves forward. It's going to be much less than the premiums would be. All right. Also, these are going to be major banks that fund these. You'll see why it's a very safe loan for them. They're very excited to loan the money on these. Your starting cash value, remember, when you open up an investment grade whole life insurance policy, if you don't know what that is, when you're done with this video, go to perpetualinsurance.com, perpetualinsurance.com, and take that free mini course I have on there for you. We'll explain all the benefits of an investment grade life insurance policy. You want one of those. If you want to not pay the premiums, you can do it with premium financing. Now, when you take out an investment grade life insurance policy, you start off with very high cash value. That cash value is going to be starting most of the collateral for the loan. You're going to have to put up a little other additional collateral. Could be anything you have. Cash, CDs, money in a brokerage account, all kinds of different things. But you're not going to have to actually give it to anybody. You're just going to have to assign the collateral for a few years. But as you continue to pay into this policy, as the premium is loaned to you, the cash value grows, and after about 4 or 5 years, there is no additional collateral required. The cash value is 100% collateral for that particular loan. All right? You're going to set up a strategy based on your situation to pay off that premium loan in a period of time. Could be 5 years, 10 years, 15 years. All right? We're going to show you some numbers what that might look like here in a minute. Now, here's the cool part. A lot of cool parts, but one of the cool parts is when you're done paying off the loan, how are you going to pay off that loan? You're going to take it out of the cash value that's been building inside that policy. Depending on when you pay it off, there's still going to be a lot of extra cash value left even after the loan is paid. You're going to take advantage of arbitrage and extra money going into that account. And because it's in a life insurance policy structure, it's going to be tax-free to use during your lifetime. Now, we already talked about you might have to pay some interest on the loan. We talked about that. So let's talk about how this looks with a real-life client that we set up recently. All right, 50-year-old man. He wanted just a little under a $6 million death benefit, had his money tied up in other things, wanted a permanent policy. So we said, hey, what about premium financing? He said, what's that? We had a bank loan him the $250,000 a year premium to fund this policy. No money out of his pocket. They loaned the whole $250,000. That bought him the $5.5 million starting death benefit. It's going to increase over time. That's the power of an investment grade life insurance policy. So that death benefit's going to get bigger over time, and every year they're going to make him an additional $250,000 loan. With the policy as collateral, he's putting up a little bit more collateral, which after 5 years, he'll have to put up no more collateral. And then we structured that these are going to be made for 10 years. So the payment, the $250,000, is going to be loaned to him every year for 10 years. That's obviously $2.5 million. All right. Then he's going to let the policy just sit there for another 5 years. So after 15 years, he's been paying the interest right along. But after the 15 years, he's going to take out $2.5 million of cash value out of that policy, and he's going to pay off that loan. And when he does that, even after the $2.5 million is paid, there's still over $1.5 million of tax-free cash value in that policy that this gentleman can use any way he sees fit. And there's also still a multi-million-dollar death benefit that when he passes away is going to leave behind that death benefit to pay off what and who he wants to pay off at the end of that transaction. So think about that, guys. He had a $5.5 million starting death benefit, a $250,000 premium. He didn't put a nickel up for it. He did start to he put up some little additional collateral that he still maintains. It just has to be assigned short term. And then he's going to make some interest payments during the time. But the interest payments he makes is far less than the $1.5 million of tax-free cash he's accruing. So a free policy, extra tax-free cash, a big death benefit to use for whatever you see fit, whatever you want to take this out for. This is a great program for the right person. It's generally for higher income, higher net worth people. Do you qualify for it? I don't know. Why don't you reach out to us? There's information all over my page just to reach out to us and find out, hey, show me some real life numbers. Here's what I'm trying to accomplish. You know, can you make this work? I need a partnership buyout. I'm worried about my kids squabbling over this business, or I want to have this extra debt paid off when I pass away. Anything you want to use the money for is up to you, but reach out to us. This is a real powerful strategy, and most people don't even know that it exists. That's why you want to like this page, like the videos, because follow us on Facebook, because we put stuff up like this all the time. Little known strategies, very similar to what's in my book called Wealth Without Stocks or Mutual Funds. Pick it up if you haven't already done so. But reach out to us about this strategy. We can't wait to run some real life numbers for you to show you how powerful this can be. Been John Jamieson talking to you. Thanks so much for stopping by. We'll see you again on another video. Bye-bye now.